Hi guys, welcome back to the channel. If you are new here, my name is Mars and I'll be teaching you through this channel. And today we are going to talk about the basics of income tax computation. In terms of structure, this video is split into 3 parts. In first part we will discuss about exempt income, in second part we will calculate taxable income, and in third part we will calculate income tax liability. Everything is going to be timestamped in the description below. So if the bits of video you like to skip, you can just skip to the appropriate section in the timestamps. Now let's jump into it. Basics of income tax computation. Income tax is payable each tax year on individuals on their taxable income. Now you may want to know what is tax year. In UK, tax year is from 6 April to 5 April. So we have to do all the computations or calculations for these dates. Another thing here is to note that income tax is being charged on taxable income, which means there may be another type of income too, which is not taxable, right? It is generally known as exempt income. Let's talk about exempt income first. After that, we'll discuss taxable income, okay? So here are some examples of exempt incomes. Income from individual saving account up to £20,000. Income from National Savings and Investment Certificate, interest on repayment of tax, redundancy payment. Now what's that? It's a payment made by an employer when a certain employee is being redundant. Anyways, it will be covered in detail in a future video. Then scholarship income, gaming, lottery and premium bond winnings, state benefits paid in the event of accident, sickness or disability, etc. So yeah, these were some exempt incomes. Now let's jump into taxable income. To reach to a taxable amount, we have to make a pro forma of income tax return. There are 3 heads of income: non-savings, savings and dividend incomes. So we have to write all incomes in these 3 heads. Employment income is a non-savings income. Trading profits are also non-savings income. Then property income, overseas income, trust income, REIT income. These are all non-savings income. By the way, all these incomes will be covered in detail in our future videos. Then interest income is savings income. And dividend income, obviously it will go to dividends income head. Total income, which is just the sum of all these incomes. From total income, qualifying loan interest and loss relief is deducted. After deducting the relief, we arrived at net income. From net income, a personal allowance is deducted. Personal allowance, it's an amount of tax-free income which each individual is entitled to receive every tax year. Every year it has a different amount. After deducting personal allowance, this amount is known as taxable income. Total taxable income. Now this income is used to determine the tax band rates, whether the individual is basic rate, higher rate or additional rate taxpayer. Once decided, then those rates will be applied to calculate income tax. From income tax, there are certain things which needs to be deducted to arrive at income tax liability, like marriage allowance, enterprise investment scheme relief, seed enterprise investment scheme relief, and venture capital trust. Double taxation relief. By the way, all these things too are covered in our future videos. Now that's our income tax liability. If there are any tax credits, they will be subtracted from here. Remember that all incomes are included as gross amount So if there is any amount which is the net amount, we have to gross it up. Finally, this amount is income tax payable, which is calculated by our self-assessment, and that we have to pay ourselves electronically to HMRC. So really hope you find this video useful. Thank you for watching. If you like the video, please give it a thumbs up. If you haven't subscribed to the channel, please consider doing so. Have a lovely day, and I'll see you in the next video. Goodbye.